All right, today we're going to jump in and dissect the technicals for BigBear.ai. This is a stock that has everyone talking because the charts are telling a really fascinating but pretty complicated story. It's like the bulls and the bears are in a complete deadlocked battle. So let's try to figure out who's really got the upper hand here.
Look, the whole story with this stock right now boils down to one simple question. Is this thing about to take off or is it about to completely break down? The technical signals are locked in a fierce tug of war, and we're going to unpack both sides of that argument. Okay, so first things first. Before we get into all the nitty-gritty chart details, let's just set the stage a little.
So who is BigBear.ai? Well, their ticker is BBAI, and they're basically an AI-powered company that provides what's called decision intelligence. They do this mostly for big clients like the government and defense sectors. And as you can imagine, in today's market, anything with AI in the name is getting a ton of attention. And trust me, this company is no exception.
Okay, remember this number, $7.05. This is our anchor for this entire analysis. Every single thing we're going to talk about, every indicator, every support level, it all revolves around this exact price.
And you got to understand, this is not some stock moving in the shadows. Just look at the volume. A massive 293 million shares traded hands recently. I mean, that's more than triple its normal average. The takeaway here is super simple. A lot of people are watching this, and a lot of money's on the line.
All right, let's start with the bulls. What's their side of the story? What are the technicals telling us that might suggest this stock is ready to climb?
So the biggest piece of evidence for the bulls, it really comes when you zoom out and look at the big picture. Yeah, it's been a little choppy lately, but the price is still holding above its key long-term moving averages, the 100, 150, and 200-day. For traders, that's a huge foundational sign of strength. It's like this powerful underlying current that could just carry the stock way higher. Okay, next up, we're going to look at something called the stochastic oscillator. Now, don't let the name scare you. In simple terms, just think of it as a little gadget that tells us if a stock has been sold off way too much or maybe bought up a little too aggressively. It's all about momentum.
And check this out. Here's what it's saying right now. The reading is super low, down around 13.8. That's deep in what traders call oversold territory. And for them, that's like seeing a coiled spring. It's a sign that maybe, just maybe, the sellers are all tapped out and the stock is due for a big bounce.
And hey, the good news for bulls doesn't stop there. The ADX, which is all about trend strength, is showing a pretty solid trend with the bulls having a slight edge. Then you've got another tool, the Arun oscillator, which is designed to spot new trends, and it just flipped positive. And of course, that insane volume we talked about, that just confirms there's a ton of conviction behind the recent moves up.
But hold on a second. It's not that simple, is it? Let's flip the script and look at the other side of this trade. The bears, well, they've got a really compelling case of their own, and it suggests that pullback could be right around the corner.
So while that long-term trend looks fantastic, if you zoom in, the short-term picture is, well, it's a lot uglier. The price is actually below its short-term moving averages and is hanging out in the bottom half of its Bollinger Bands. Think of those as volatility channels. All of this is screaming short-term downward pressure. It tells us the bears are in control, at least for right now.
Okay, to get this next point, we got to talk about the MACD. You've probably heard of it. It's one of the most popular indicators out there. All it does is spot shifts in momentum by comparing two different moving averages. Super useful.
And this is where a big warning sign starts flashing. The MACD is showing what's known as a bearish divergence. That basically means the short-term momentum is peeling away from the long-term trend. That negative histogram, it just confirms it. For analysts, that's a major red flag that the downward slide we've seen lately might just keep on going.
And the case for the bears just keeps getting stronger. Volume flow indicators, they're showing what's called distribution, which is just a fancy term for heavy selling. Another momentum tool, the Williams %R, is deep in weak territory. And the PSAR, which helps spot the trend's direction, is sitting above the price. That is a classic bearish signal.
So what do we have? We've got a really strong case for the bulls, right? It's all rooted in that long-term trend. But then we have this equally strong case for the bears, based on all this short-term weakness. And this right here is where the story gets super interesting, because the data is just screaming conflict.
And this right here really lays out that core conflict perfectly. On one side, you have this weak, struggling short-term momentum. The price is just fighting to stay afloat. But on the other side, you have that solid, long-term bullish support that's still holding up. It is a total classic standoff between what's happening right now and the bigger picture.
So what does the RSI, one of the most watched momentum indicators on the planet, have to say about all this? Well,
It's pretty much just shrugging its shoulders. With a reading of 49.32, it's sitting almost perfectly in the middle, right on the 50-yard line. This just hammers home the point that the market is completely and utterly undecided. Neither the bulls nor the bears have a clear advantage at all.
Okay, so with this crazy technical stalemate, what happens next? Well, it all boils down to a few critical price levels. Let's break down the actual numbers that are going to decide who wins this fight.
The easiest way to think about these numbers is as battle lines. For the bulls to win, they have to push the price up and break through that resistance ceiling. Their first big test is right there at 724. Meanwhile, the bears are trying to do the exact opposite. They want to shove the price down through the support floor, and the most critical line in the sand for them is at 693.
So here's the bottom line. It really comes down to two very clear paths from here. For the bulls to take control, the price absolutely must hold above that 693 support level. If it does that, their next target is that 724 resistance. But if the bears manage to break below that 693 line, that's a huge victory for them, and the price could fall and fall fast, probably down to test that next support at 606.
And that's where things stand. It is a truly fascinating technical picture, a market in almost perfect balance. You've got these powerful long-term trends crashing right into weak short-term momentum. You have the bulls and the bears locked in an epic battle right at a critical price point. The data makes the conflict crystal clear, but it gives us no clue about the resolution. So the big question is, what's going to be the tiebreaker?